Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing more than just an expert in this industry, but a friend of mine, Peter Grandich. How you doing today, Peter?
Well, here we are on March 9th celebrating your birthday, so I'm glad that I hope you consider me part as a birthday present.
Yes. I got something, I want to do later on in the interview that I think would be very, very special for this 38th birthday of mine. So as we get started, obviously there's been a lot of headlines on what's currently happening with Iran and the price of oil. Oil hit above close to $120 a barrel today as of this recording. And I'm curious in your perspective on that. So there was one last thing. There was I just looked at the headline of this article where oil dropped 25% in the same day and such. And so, it's a very volatile market. What's your perspective?
So good news for me. I don't normally do pats on the back when I do interview, but around 10:30 this morning, I issued an alert, put it out on my X page that I had thought oil peaked. Gold and silver had bottomed because they were way off, and the stock market was going to turn green. And I'm not a bull on the stock market for any length of time, but for reasons that was discussed in that. And as we speak here at the end of the day, that's exactly what transpired. But I don't think it's a back to happy days are here again by any stretch of imagination. Now, a lot can happen between us speaking and whenever you may issue this report. So my view is going to be for a minimum of a matter of weeks from now, if not months or a few years. I think what's more important, what's transpiring, believe it or not, in that was actually two other news stories that happened last Friday that got very little coverage relative to the oil. And what this is going to demonstrate to perhaps the thing that kept the stock market mostly up during 2025. And I'll start with that one, Darrell. And that was a year ago, Trump had a lot of political chips to play. He had a lot of believers. There were a lot of people thinking it was going to be a dramatic changes. He talked at that point, Doge and him and Musk were talking about paying down the deficit and paying the debt and all these other things. But what I think comes out of this is, and this was this situation in Iran, other than if somehow they're entirely gone, a total democratic process takes over there, and everybody says kumbaya in the Middle East and come together, this is actually going to be a net negative for Trump because he went against one of the principles that people voted him in for, and that was to avoid things like this. Mm-hmm. Plus, with other factors happening now, and then last week he talked about when he said he was for all mass deportation of illegal immigrants. And then he has a press conference and says, most of them can stay. There's a few bad people we want to get rid of. So I think his political chips, and that helped keep the stock market up last year. But the two other news stories, one was the employment number. And it wasn't the disappointing on the month number because we've gotten used to that. It's been way off. But they admitted the Bureau of Labor Statistics, BLS, which I really think should be renamed to the Bureau of Lying Statistics, because it turns out they had 2.5 million native workers that they were carrying and said existed for the last few years. They just made them unexistent. They don't exist anymore. And that really, I think, really should shake everybody up and make any number coming out of them now totally not trustworthy. And then the other story, of course, is the bigger one of those two. And that's what's going on in the private credit and the private equity market. It's a whole lot bigger. It's a whole lot worse. They wheeled out last Friday spokespersons from BlackRock and all, onto the major financial networks to tell you everything's all right. And I learned from 42 years, when they're doing that, it's not all right. Because when it's all right, you don't have to worry about things. But when you got to go out and try to hold hands, that's another situation. So to answer your question, the Iran war, how it ends up here, other than a total victory and a total change there, is not a net positive. I think also what we're going to get out of this is we need it, and I've said this over and over since getting out at the almost top of the gold, we need it after the parabolic decline to build the base again, and ideally for gold just above 5,000. And that's exactly what's happening. Darrell, you have to understand, we were talking earlier before we started. 5,000 was just a pipe dream for most of us 10 or 20 years ago.
Mm-hmm.
Now 10,000 is, 20,000. So building a base here after the tremendous rally that we had the previous 18 to 24 months is very healthy. And I have to tell you, I was a little more impressed today on how quickly silver turned and finished up sharply. And now we're trading in the 80s, and we still have people disappointed because it should be at 200 or 300. No, the way gold and silver and copper are trading stands for very much higher prices down the road. But down the road, not tomorrow, not next week, or maybe not even next month.
Yeah. Yeah, for sure. Yeah, that's helpful context. Thank you for laying all that out. So in the article that I recently read, it said that, oil price dropped 25% as Trump hinted at not pursuing this conflict with Iran. Okay, so typically in the streets, right, if you throw that first punch, and you get the best out of a guy or whatever, guy or gal, and that person may still have a problem with you and still want to cause some issues or want to fight again, get a rematch or to fight again, just to put it in layman's terms. And so I'm curious in your perspective on, even if the U.S. does pull out of this issue, what could that mean for Iran moving forward? Do they just let this go? Curious in your thoughts.
So first of all, my view was, and I shared this afternoon with my clients, that this was just another Trump. His ego was so big, and he tied everything of his success to the stock market, that when he saw it down another 1,000 points earlier today, as far as he's concerned, what do I got to say to try to turn this? Okay, the war's about to end, or I think we won it. I don't know if that's actually the actual case at this moment, but for today at least, it helped, quell the market and all. You're a very good point. Outside of that change and any certainty, remember the whole theory behind this, why he decided, let's not lose sight on this, is that they not only were working towards a nuclear weapon, which just a few months ago we supposedly destroyed, or the capabilities, which obviously if you now believe this, then that didn't happen. Yeah, but they were right. Very close to potentially using it. And obviously the biggest fear among all that was Israel. But let's face facts also. If that was really a wholesale belief by everybody, all the surrounding countries have to be concerned too. If they toss a nuclear weapon at Israel, it's going to impact the whole Middle East, if not, much more around that and all. So I don't know, as you and I speak about this, what's left or what has to be done to have certainty of that. Listen, if it goes back to another deal, this is what everybody's going to say. You didn't trust them before. There was this other deal that Obama made. You got rid of it, and now you're entrusting the same people. And by the way, the guy that's running that country now, he's just the son of the guy that's gone. Yeah. So it's not like you brought in some independent or person that was an opposition party that was in that country.
Regime change.
They're going to run it. So you're absolutely right how Iran reacts. And, for Iran, a draw is a win. Other than us completely getting a change there, it can't be considered a win, especially even though, and it's terrible to say that it's just, a dozen or so lives. Lives lost is bad enough, but the cost of what we went through and so forth and so on. And it looks like we alienated the very people that Trump was with last year in different Middle East countries. We're all great friends. They're going to send us trillions of dollars and make investments. And now they're just like pedo, that we kind of brought them in and didn't protect them in the same way that we did Israel. So I don't see net other than a complete changeover. And we actually know that we have their enriched uranium and it's not controlled by them anymore. I don't see how it ends up a win now for Trump.
Mm-hmm. What's your thoughts on this issue with the munitions? So we have these interceptors that are trying to intercept these missiles, and some of them are not. Some of the missiles that are being fired, like at Israel, are getting through and such. And so there's this talk about our munitions being low. And so I'm curious if you have any thoughts on that.
Well, obviously it is, and defense contractors have smiles from ear to ear right now. But the other concern is that, that doesn't happen overnight. It takes a while. And what happens if something else breaks out, including, Taiwan or wherever people are concerned about. But what bothered me today that I posted on my X page, it turns out that the two sons invested in this major group that now stands to make all sorts of money from these drones. They invested in this drone company that we ended up using. And it is a questionable thing. We already know what they've done in crypto. They made billions to Trump in the last year in that market. And should relatives of a sitting president be able to invest like not being a blind trust, but know what they're doing, and be able to invest in now a company that the U.S. ends up spending all this money on to get drones from? I'm very troubled with that. But, I also posted and said, well, this is something Congress should look into. But why? Congress is a den of thieves, too. From both sides of the aisle, we got Congress people making tens of millions of dollars. So it's just a whole mess. The difference was Biden and his family hid it, try not to anybody see it. The Trumps appear like they're willing to do it just in your face without any issues. Yeah,
for sure. I'm curious, did you watch Melania Trump's movie?
No, I haven't.
All right. I didn't either. If you're in the audience, if you watched it, give us the synopsis in the comments below. Okay. So thinking about, the metals, right? So obviously, it doesn't seem like we're in position to, get involved in another boots on the ground war, especially if our munitions are low. And China still refines about 90% of the world's rare earths, which many of these are used in some of these technologies and weapons that we use. And so I'm curious in your outlook on the increase in the military budget. I think Trump mentioned $500 billion extra last year, and then I think he came out and said 1.5 trillion, which I think is the same because it's about $1 trillion now plus 500 billion. So it seems like defense spending is going to kick up significantly. So what do you see there? Do you see there's opportunities there? How are you processing that?
Well, we're going to hit very soon 40 trillion in national debt. And just a couple of weeks ago, the Congressional Budget Office now is forecasting It's hard for me to say this, Darrell. I was telling you when we were talking about how long ago I was 38, I was still a stockbroker back then. We didn't know what $1 trillion was. There wasn't $1 trillion anything. Now we're going to have 40 trillion heading, according to the Congressional Budget Office, to 64 trillion. And one of the issues that I think is important, that, if I may interject here, we had the bond actually rise in rates, which years ago when a conflict like this took, the bond market had a strong rally. And that reason is, and one of the things that I keep talking about is, I don't suspect we'll ever be able to get much below 4% on the 10-year, whether we have a weak economy or not, is because more and more people around the world are growing more and more concerned about this country's ability, forget about paying the principal of it back, now paying the interest. And this is the one question, if you said, Pete, if you had one wish right now, what would it be other than wishing you a happy birthday? I like to go on the national networks and ask all these talking heads to come on. If the Congressional Budget Office is correct, but let's go with their original talk, just 50 trillion, they said 2 years ago, by 2035. At 50 trillion and a 5% interest, we'll have a 2.5 yearly trillion interest expense. The best this government's ever done, Darrell, is a little over 5 trillion in income. We're going to be talking about almost half of our income going towards paying an interest expense. There is no way the government we're used to right now and the services and all they provide, including Social Security, Medicare, what have you, will be able to function in that regard. And so whether you talk whether it's going to defense or whatever it is, we're in an unsustainable path, and people say, well, I've been hearing that for years. You're correct. But it's accelerated to the level now that almost everybody watching this is going to be living when the time bomb goes off. And it's going to go off well before 2035 because people around the world are not going to keep buying our debt, certainly not at very low interest rates. They're going to want a much higher interest rate to take the higher risk that's going to come along with it. So I think, irregardless of whether defense spending goes up or whatever the case may be, the complete out of control of our debt on the national level is still, despite all sorts of other issues now we're facing, still the biggest 800-pound gorilla in the room.
Okay. So what does it look like when that debt bomb goes off? What kind of world are we in that scenario?
Well, this is where the one time I don't mind being is turning 70 on April 2nd, because I may not be here when that transpires. It's sad. So let's talk about that, Darrell. We should be serious about that. So we have 2/3 of Americans working paycheck to paycheck. We have 2/3 of Americans that don't even have $1,000 saved for emergency. And 1 out of 4 workers now is using some sort of debit just to get by daily life, gas, food, clothing, rent, etc. What are these poor souls going to be at when the government can't even provide half the services that it provides now? And the natural tendency for them is to ask the government to help them, especially those that are aging and find it much more difficult to be working at an older age because you can't live this fantasy of retirement and, sitting down in Florida and playing golf, fishing, whatever the case may be. And so it's a much troubled outlook. And it doesn't have to actually be at that point, because as we get closer here and as people realize that, there's going to be more of a movement towards socialism. And that's why the hard left right now of the Democratic Party gets an ear, because basically they're doing what's been done for centuries. Point to the elite, say that you're suffering because how those people are living, and you got to take something from them. And here's the bottom line. The 10% wealthiest Americans own 86% of all the assets. The remaining 14 is the next 40%, and half don't have it. About a month ago, the top 1% wealthiest Americans had more wealth than the entire middle class. And in a consumer-driven economy, which we are, 2/3 of our GDP is consumer-driven, the bulk of that driving came from people not in that 1%. Now, we've been sustained somewhat because they've been living a life of luxury and going us, but more and more people are struggling and not spending the money that expectations will be. And as we get into latter part of this year and we have an election, and if there's a change, at least in the House and or the Senate, everything is going to stymie. Nothing's going to move forward. For 2 years, they'll be impeaching Trump 22 times over, et cetera, et cetera.
Yeah.
It's not a pretty picture, and we don't have to wait for 10 years from now. It's just going to get worse as the months and few years pass in front of us.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper cake. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I recently read the Communist Manifesto by Karl Marx. I think that's a good read for people that want to understand the issues with communism. And one of the things during the French Revolution and in the 1800s, you had the working class like rebelling, revolting, overthrowing governments and such because of their pay, their wages, all of those things, right? But one thing he mentions throughout that book is the machines taking a lot of their jobs. And I was thinking about this in terms of like AI taking jobs, and so curious in your perspective there.
It's a very, very plausible concern to have. We're now hearing from various people who have children that just graduated college a year ago and now as well, that can't find the work that used to exist just a couple years ago in entry-level positions in several industries, mostly industries where you use more of this than your hands. We now have some people, not a whole lot, but a few from that industry coming out and really concerned about how fast it's evolving without any real guidelines, how much employment's going to be hit, and even worse than that, how the machines could almost start to think for themselves and act for themselves. And I always tell people, unless you're my age, you don't even know what the movie was about. There was an infamous movie made back in 1968 called 2001 Space Odyssey. And you can still see it on YouTube, but the most important scene is when an astronaut wants to get back into the spaceship out in space, and the computer has assumed that and learned that the astronaut wants to get rid of him, so it just takes control, doesn't let him back in. Well, we've now seen in stories come out where AI has created fictitious charges, claimed that one company, somebody was having an affair with the other, made like somebody was stealing, what have you. Very, very concerning. And when you think about that, plus the robotic, look what Amazon just did. Massive layoffs with not even a day's notice. And, you know, many of these, we have a major warehouse here that they said is going to be 95% robotic. So AI is an extremely concerning development. And we're past the excitement now of the handful, and there was a small percentage, made a lot of money buying these stocks and all. And now they're becoming a net negative, not only for those reasons, but the fact of how much they've spent and have yet to make a lot of money. So AI is a very, very evolving story, mostly as I see it, and I think I'm not alone, with a lot of baggage of negatives.
Mm-hmm. What would be your advice to people watching the show, including myself, that have young kids with this issue of AI? And obviously, you know, some of my kids, you know, they're 7, 3, and 16. You know, so in 10 years, who knows what this could look like, right? So just curious if you have any advice for those with young kids.
Well, you know, it's not something I do for a living, but as a separate human being living in this world, I sooner hope that they develop a skill where they could use their hands versus their brains, meaning, you know, be an electrician, be a plumber, be things yet that have not AI can or robotics can take over. But now I was just watching today how robotics and what they've advanced in China and the skills that they could already do, household chores and all. And you know, it's a funny thing, and you won't know this, I don't expect you to, but people my age will. But there was a cartoon that we grew up with as kids called the Jetsons. And it was, you know,
I know the Jetsons.
Okay, so, you know, it was out in the future. And if you look at many of the things that they actually used cell phones before they were, and intercom, a whole bunch of stuff, you know, cars that went without, you know, you driving them and so forth. Well, if you look at some of the things they predicted, you know, that there would be these robots doing a lot of things and all. And the concern that you have to have it, we just saw robotics able to pick vegetables. And it's just, I don't think anybody's taken into account the potential real loss of types of jobs that we can look at, and got all caught up on the excitement of, and let's not forget one thing, there's a lot of good that can come out of it. One of the things that clearly is starting to demonstrate is that there could be some very big cures coming out for disease and so forth and so on. But outside of that, I think it's a net negative. And I wish I can say there's a simple answer, but I really think let's look at some of the jobs that we already know have been eliminated. Financial, legal, accounting. These are jobs where you're hearing 2/3 of workforce being let go because now artificial intelligence is taking over, and they're arguing yet that the intelligence is only up now to a college level, that once it even gets to a higher understanding in what it can do, how many more jobs are going to be eliminated?
Okay. Yeah, that's definitely not the most prettiest of pictures to think about. And so, what role does the precious metals play into this equation for those that are stackers, investors, things of that nature?
Well, I think for the near term, which for me is 1 to 3 years. And, when I was a money manager, we never gave a forecast without a 3 to 5 year outlook. You talk to people now about 3 to 5 years, they laugh at you. 3 to 5 months, maybe, Mr. Grandich, but not 3 to 5 years. But I think if you're investing for the long term, the arguments still that exist to own physical metals have not changed. We're seeing again how out of whack countries are with their fiat currencies through debt, through mismanagement, etc. The inevitable implosion, whether it's serious deflation or huge out of control inflation, most paper is not going to be worth, as they say, the print and the paper that it's printed on. So I think they will always be viewed by people as an alternative to fiat currencies. What I do think, and why I've been more attuned, more bullish than over the years when I used to get yelled at for not being as bullish on silver as gold, is that in silver we just see a continuous increase in the industrial fundamental uses of it, and also copper. There's just no way you could hope for the things that the bulls speak about and not have copper play a bigger role in it. So I think it's the one area I still think, while not cheap anymore, is still playable across the board when you look at that versus, say, the general U.S. equity market or technology or things of nature. They still, to me, have 20 to 30 to 40% potential to go lower over the next few years.
Okay. So for the mining equities, so obviously you got producers, developers, exploration, and such. Where do you think we are in that cycle? And I asked that question because some of the developers that I've been investing in, they're not going to be in production till about 2028, 2029, 2030 and such. And thinking about that, that's like, 3 to 4 years away from here. So it kind of has me thinking about, okay, where are we at in this bull market cycle? And so curious in your take on that.
So M&A, which just 2 or 3 years ago was strictly a buyer's market, is moving towards the middle, towards the seller's market, meaning those companies are going to be more likely to have more leverage in their growth for those that may look to acquire them than they would have had a couple years ago. And the reason is we just had another major deal in the copper market, leaving, and the one major holding I have has seen 4 of the key peers that used to be of theirs taken. And so there's not a lot of advanced stage companies with advanced stage metals that can come in the next 2, 3, and 4 years. We know that the majors, the biggest ones, know that there's an issue because they've tried to merge. They've had issues and it's fallen through, but clearly they recognize the need for it. And so I still think we have a multiple of years left. The difference is, and again, I wrote about it this morning on my X page, that is that the so-called easy money has been made. But the most volatile part of this bull market is just before us. And so get used to these swings up and down. But we have not seen hard speculative dollars come into this yet, because where it used to be, the stock market and crypto, is just topping out, and that's going to see this roll over. One of the interesting things about PDAC that I gathered from people that I know who have good minds and understanding is, they said there were more people who normally don't play the metals at PDAC than any remotely other time year before, because the generalists, the folks out there who need to find growth, what sectors outside of metals could you argue still have a lot of growth in front of us? And that's why I think people who don't normally play this industry will be forced to play it, because the other things that work for them for the last several years aren't going to work for them. That's why I still think there's multiple years left, Darrell, and especially if you're advanced development, meaning that you're in past pre-feasibility, going towards feasibility, or you're already at shovel ready and you're actually developing it, the premium you're going to get now could be 2 to 3 times more than you would have got 12 or 24 months ago.
Yeah, for sure. So the easy money has been made. There are some companies out there that are trading at a significant, discount to their net asset value. And I'm talking about some of the developers and such. And so curious if you have any thoughts on that particular part of this chain.
So net present value is where a lot of people are going to look at, especially when you have these high priced metals. And right now you're correct. They're trading at 1 to 2/10, and normally they get to a full, when they're ready to be taken over or go into production. That's why I said I don't see a lot of overprice, and this recent corrective consolidation really took a lot of the excess that was when we were parabolic going up. And one of the places it was absolutely clearly in the uraniums. And but they're all healthy. And by the way, if there's uranium bugs out there, which, at one time I was a huge uranium bug, you have a lot of positive news out of this Middle East. If there's not even a more argument about, if we had nuclear, we wouldn't have to worry about oil. That's another positive that's going to be worked into the bullish story in the coming months because of what's transpired here and all. But nevertheless, like I said, I still think outside of way down the food chain and pure exploration and not even a resource yet, those will be the very last. When they go, then we're clearly at the end of the run. But I think advanced development now is the next group, and M&A is even going to be more now than it's been the last few years in the metals and mining industry.
Gotcha. Okay, so curious in how you're currently positioned. Are you mostly in miners, physical, cash? Like, how are you kind of dispersing your investment?
So there's me, and then what we advise our planning group. I took an extremely defensive position, because of how much I had made the past few years, reaching age 70, and for the third time, I didn't want to give it back as I have over the last 40 years twice.
Yeah.
So because of the big concern I had about the stock market and things in general, I took a very liquid position for myself. I own one huge position in one company. But what I just think here now is these are the standards to what I tell anybody that comes in looking to us here in the U.S. In our planning group. First is less is more. That's a standard. It's been a standard of mine for 20 years, which also includes lowering, eliminating debt. And you and I have had this talk over the last few years that we've known each other. Living a lifestyle at least one level above their finances, I see 7 or 8 out of 10 families doing. So less is more. We don't need as big a house. We don't need as big a car. The second and more relevant to the question you ask is capital preservation now should be more important than capital appreciation, which wasn't the case a couple of years ago. And that just means you can still take shots at trying to turn $1 into 3 or 4, but it's not going to be how much you make in the next couple of years, in my view, but how much you don't lose, which is going to separate the winners from the losers. And so with that in mind, safety of principle is paramount to me. So here in the U.S., where we still find people that want to have exposure to U.S. equities, we talk to them about equity index annuities or ETFs that mimic it, where they give up some of their upside, but they also don't suffer some of the downside risk. And that's what I think people should be focused on, preserving principle, taking their shots, but not anywhere as aggressive as they might have been a couple of years ago when the markets in general look to be easier than they do now.
Okay, so the last 2 gold bull markets, we had a correction along the way. So, for example, I think it was in the 70s, we had about a 2-year time of correction. I think it was between 74 and 76. Then we had a 1-year correction between 2008 and 2009 before we ran up and had to blow off top. So curious if a correction, a year-long correction or more, especially if the S&P or the Dow turns over and significantly starts to fall, do you see that in the cards for the metals?
So my view has been I stepped aside before the parabolic bust happened. I came within $4 at the bottom, which was just a lucky guess, I guess. But the bottom line to me was that it was going to take many weeks, at least a few months, if not almost the balance of the year, before both gold and silver would make new all-time highs. And the longer it took, the better it was for those that still want much higher prices. So my best guess, and that's all we ever do, I don't know what anybody else tells you when you interview, but that's all we could do is make a good guess here, is that we've seen the lows in gold, which is around 4,400. We've seen the lows in silver in the high 60s. But the longer we move sideways and work our way up, or what I like to call 2 steps up, 1 step back, the actual better would be to reach the numbers that some people still think that they can get to, which 10 or 20,000 on gold and 200 or 300 on silver. How long that takes, if I hoped it was 6 months and it took a year, I learned many things we can spend another show about what not to do. But I can just tell you this, it's better to be a year too early than a day too late. And I don't think we're late yet in the metals. I still think they will be higher than lower going down the road.
Okay, got it. So just thinking about the what we started off, it's my 38th birthday, and so I'm curious what advice or what wisdom do you have for me at this age?
So since I met you, and we'll talk about it publicly, even though we talk about it privately all the time, for me, and people really say, well, what really counts to you? And that is the belief in a supreme being, and in this case, in the Christian belief, that there is a Lord and Savior called Jesus Christ. And he gave us a manual. We provide it through various writers, a manual to life. And we call it the scripture. Now, for people that have never read it, or maybe read it when they were young and moved away from it at all, they would call it a book of don'ts. But it's really a book of do's, and for me, it's the foundation on how to function. And some people say, well, Mr. Grandich, what if it's not true? And my answer always is the same, Darrell. It's still a better way to live. And so, in a society and world that looks like it's gonna so-called hell in a hell basket, I think the survivability will not come from hoping one human being or a thinking way is going to save us. But the creator of all the universe is our truly only hope. And for me, at least, that creator is Jesus Christ.
Yeah, for sure. All right, so what about financially? What are some of the things that you would have for either my generation or people my age?
Again, talks that you and had off the air, and that is debt is the dirtiest 4-letter word. It's far worse than any of the curse words we could say, because it enslaves, and again, going back to scripture, it's a great teacher. There's not a positive verse in all of scripture about it. So getting debt free and getting out of debt was something I know you've worked on quite a bit. It will not only help you financially, but it changes your mental scope, which is very critical in this world. I also think that there's no quick fixes. We've become very more short-term oriented. I talked earlier in this interview how we used to have 3 to 5 year outlooks. Now, you talk to anybody past 3 to 5 months, recognize that most times things take a lot longer than originally believed. And patience is truly a virtue. If I noticed one thing, even with my daughter who's in the 30s, patience is something that is a lost art. Yet, for some reason, maybe because our parents and grandparents had much tougher times, they learned that they only had no choice but to be patient. But patience is a very important thing, and giving things time to work out is another.
Yeah, for sure. I mean, and to the faith point, I think, for people in general, like there's a lot of toxicity. There's a lot of, life is volatile, right? Politics are volatile. All of those things there's so much volatility, and you have to have something that grounds you. And one thing that really sticks with me is the parable of the house that was built on sand versus the house that was built on the rock. And so that's something that, I live by. And in addition to that, I'm thinking of like longer term. So some of my biggest concerns, which really piggybacks off of your perspective on debt being the worst four-letter word, right? This thing with Social Security, Social Security's running out. There's a retirement crisis. You have people like my generation and Gen X having to take care of their parents in their older age while also having to take care of their children. There was some recent articles where people are starting to pull out of the 401ks to cover expenses and such. And so, this whole thing about the retirement crisis, it's for me, it's like, okay, I'm looking out, 10 years, 20 years and such. And what do I need to do today to prepare myself for anything of that nature? Because even now people are outliving their retirement. And so any thoughts there on that front?
Sure. So that's what I spend most of my days on, not the metals and mining, because that's our primary business in our planning group. And so it used to be a saying, live within your means. Now my saying is you need to live under your means. Because here's what's naturally likely to happen, Darrell. As these issues that we talk about, more debt, governments having more troubles, et cetera, government still needs to function. And government, whether it's on the national, state, or local level, really only has a couple of choices: taxes and cutting expenses. Those are the two things. Well, we already know half of Americans are working paycheck to paycheck. You really can't tax them that much more because they'd be taxed into bankruptcy. They won't even be able to, get by. And of course, they're already looking for government system in a lot of ways. And then the extremely wealthy always find ways, have for hundreds of thousands of years, to escape paying their fair share. So it's really the working stiff that's accumulated some savings and so forth, that more and more government's going to come to you. I'll give you an example. And this is a concern of mine that I've expressed to our clients. A couple months ago, people lived in Massachusetts, opened up their mail and were just shocked because a vast majority of them saw their utility bill triple overnight. And yet when they looked at it, their usage of electricity was still the same, except that a surcharge has now been mandatory added that tripled their cost in order for people that the government in Massachusetts assumed or decided who couldn't afford their bills because of either the zip code they lived in or whatever, and therefore these people were mandatorily charged a double or tripling. That's a form of socialism. They can call it whatever they want, what have you. But those are some of the things government's going to be forced to do, and it's going to happen in other states. They're talking about it here in New Jersey. It won't be just limited to electricity. It'll be water and usage of highways, et cetera, et cetera. But the bottom line is, expect your cost to live to go up, not down. No matter what they're going to tell you around Election Day, I'm going to lower taxes and all. If I had $1 for every politician that said they were going to lower my taxes since I started paying taxes, I'd be very, very wealthy versus how many that actually did that. And that's the concern that you have. So not only you live within your means, now you need to live under your means in order to be fairly certain that you'll be able to live through these tough times, which seem to be more and more likely to going to occur.
Yeah. Yeah, the interesting thing with taxation is what I've been seeing is that, you may get a tax break in one shape or form, but you're paying for it in another shape or form. And, and I've gotten into many, these kind of like debates with whether the tariffs is a tax and all of that. And by definition, obviously the Supreme Court ruled on it, in terms of, Congress has to approve those types of measures. So it's treated as a tax. And then also, we saw the cost of certain items rise during the tariffs. I mean, I think Trump came out and said he was going to take the tariffs off of beef or some of these other prices that increased, during the tariffs and such. And so, it's like, okay, well, the cost does typically come back to a consumer. Then bring that back to like the state level. State level, for where I live, there's no state tax, but they continue to increase the sales tax. And then now there's a tax on if you buy precious metals or sell precious metals from any other coin dealers. There's a 7 to 8% tax on that. And so it's always like every time you seem to get like a tax break, the government's going to come in one way or another to kind of get the money from the back end or whatever.
So as bad as the tax issue is, the other word that they use, which people have not gotten used to realizing is just another form of taxation, and that's additional fees. If we look at any bills that we've gotten, we used to have 1 or 2 lines of costs. Now there's 7 or 8. And it's like you go stay in a hotel now. They were showing bills in New York where the room was $200, but by the time they got all the different taxes and fees, it was $400 and something dollars. So fees and taxes is the usage that politicians have in front of them, and there's only one way they can go up, Darrell, and that's up. And that's why more and more of this, as we get towards this election, is going to be about cost of living. At the end of the day, it always comes down, most times, elections, to the pocketbook and economy. And that's why I was very concerned going into this year that Trump bet too much on the stock market, which really just that upper echelon basically benefit from, where the rest of the people don't, where they've seen the costs, what little they had, everything was going up. People were realizing food isn't just going up 2%, and these things are going up much more. Look at our insurances. No matter what kind of insurance you have, whether it's your home insurance, car insurance, health insurance, they're all going up double digit. So that's what we need to do. We need to really be prepared that costs are going to go greatly up. And one of the ways you can hopefully weather it is to live under your means. Most people could step up and buy a little bigger home or a little bigger car, but it also adds to their cost. And that cost is just not worth it given the stress and strain that people come under. You talked about something, before we go, let me just bring this out to you. So they come out with a study now that 2 65-year-olds, and you still got a ways to go to that, but 2 65-year-old married couple, 1 out of 4 chance one of them's going to live to 100. So if you use the old, well, retire at 65, 35 years that person's going to be retired. Basically half of what they worked would be retired. No one's planned for that type of planning at all. But the other number that came out, it's almost $700,000 now for someone at 65 on the expectation of life expectancy that they're going to need just to pay for the medical costs that Medicare and Plan B and all doesn't cover. Do you know how many people we see at 65 that have $700,000 saved, period? Let alone $700,000 just to pay their medical costs? That's a number that's just, it's insane what's happened with medical costs. And that's another big issue that maybe another time we could speak about.
Yeah, for sure. Yeah, a lot to think about, especially going into my 38th year. So I appreciate those words and that knowledge because I definitely have to plan now. There's this saying, if you fail to plan, you plan to fail. And so it's important for the audience to even be aware of that as well. So, Peter, where can people connect with you, follow you? I know sometimes you do Q&A on your X page and such. Connect the audience.
That's the best place to where I do most of my communicating. I mean, you can learn about us through petergrandich.com. And I do still have a YouTube channel where I put great interviews like this, and I do an occasional what I call Pete Speaks. But by and large, whether it's any of that, it all goes on my X page.
Okay, sounds good. Well, I appreciate you and your time and look forward to catching up again.
Good seeing you, my friend. God bless.
You too.